As we know, at this stage in this current market cycle, calling for a bottom has become increasingly popular. But no trader knows where the exact bottom is, and if someone tells you they do, they're probably just guessing. So instead of trying to predict turning points, I prefer to wait for the market to tell me something has changed. That's where Chris Laurie's concept of characteristics of a price swing comes in. And using this exact concept is one reason that I believe the Ethereum bottom could potentially be in. So now memorize this image as we now look to implement this on the Ethereum chart. So first we will look for the liquidity base, and this is where the move begins. So it's going to be obviously down here, as you can see, this move towards the downside before the bottom. And then we have the start of this new uptrend, this new cycle, this new swing. So I'm going to put number 1, liquidity base, and it's going to be just there. Then we are going to look for the point of release. And this is somewhere where, eventually the balance between buyers and sellers breaks. One side overwhelms the other, causing price to leave, the range with conviction. And then this is where the auction begins. So I'm going to put the point of release, which is number 2, just down here. Like so. And like I say, the stronger the imbalance, the more explosive, aggressive this move usually becomes. Then number 3 is the skinny leg, the strongest part of the move. And this is where price travels quickly, like so, very impulsive, with very little pullback, because there simply aren't enough opposing orders to slow it down. This is why chasing candles often feels like, it's tempting, but it's usually too late. So I'm going to put number 3, the skinny leg, right here. So the key characteristics here would be large candles, little overlap, minimal retracements, and strong momentum. And that's exactly what we have here on number 3. And then we are met with number 4, which is price pause, which is literally exactly this. This price action here, fits that perfectly. Basically, this is eventually where buyers begin taking profits, sellers start becoming interested, and price pauses, but importantly, it doesn't reverse. The market is simply digesting that previous move before deciding whether another leg higher is possible. Then, of course, we have number 5, which is the continuation leg. And this is where price breaks out of the price pause and obviously continues higher. Then, of course, we have some sell-offs. And then we have further continuation, just like Chris Laurie describes. Then we have number 6, which is the consolidation apex. And this is where the trend starts losing energy. Instead of continuing higher, price compresses into smaller swings. This tells you buyers are no longer in complete control and supply and demand are becoming more balanced. Chris Laurie refers to this as the apex because it's the point where the market must eventually make another decision. So number 6, consolidation apex, will go just there. Then we have number 7, which is the retest of the higher low. And this is after breaking below the compression, price often rallies back. And this is a test. If buyers can't push above the previous highs, it's evident demand is weakening. And this is often what professionals begin looking at for short opportunities. So number 7 would be a retest higher low just there. Then we have number 8, the apex base break and retest. This is where price breaks beneath the apex, then it retests that broken support as resistance. This is classic market behavior. Support becomes resistance. If sellers defend it, successfully, probabilities begin favoring a larger move lower. And this is one of the highest probability confirmation points. And we are going to place that around here. And then we'll have number 8, apex base. Then we have number 9, which is the shelf, the top bottom retest. This is where price finds support again. This creates another horizontal structure. Many traders mistake this for being the bottom. Chris Laurie's views is another auction. If buyers can't create higher highs from this shelf, it's simply another pause within the larger trend. So I will place that shelf around here. As you can see, the support, and this is number 9, the shelf. And I've got to mention the shelf bottom, which would be around here, because as you can see for number 4, the price pause during this pause in momentum, you can see this was, this was support during that. So that is the shelf bottom. So I'll just add that there so we know what we are referring to, shelf bottom, before we move on to number 10, which is the gap slip. So basically the support gives way, as we can see. The support is lost. And once it breaks, price often falls rapidly. As we can see, again, very impulsive move towards the downside. It's almost like the market slips for an area with little liquidity, and these moves are usually fast and emotional. Gap slip, number 10. So before we move on, I just want to compare this to the original chart I showed at the beginning, so we can really see how Ethereum is shaping up to fit all these characteristics. Because I tried it on Bitcoin and I don't think I got past, the 0.3. I've tried it on numerous altcoins and it just wasn't working. But so far with Ethereum, everything is, we can see here the liquidity base, the point of release, the skinny leg here, the price pause, the shelf bottom, the continuation leg like here. Then we have the consolidation apex, which we can see at the top, where, price fails to move higher. Then we've got the retest here, and then we've got the apex break, and so on. So everything is following this, perfectly, giving me the confluence, the confirmation, the validation, whatever you want to call it, that the Ethereum bottom is potentially in just because of this. We haven't even finished it yet, so we'll get back to it now. We are on number 11 now, so let's get rid of this and move on. So number 11 is clean breaking point, which is a major support level. So we will place it there. As you can see, it's a respected support, during this, phase of the swing, and again here. And this is where the market finally breaks this support level. As you can see here, week longs panic, stops are triggered, late sellers enter, and emotions reach an extreme. Ironically, this often happens very close to the end of the move. So that would be number 11, clean breaking. Clean breaking point. Then number 12, which is, again, the point of release, POR, which is over, over here, just above 1.5k. So just as the uptrend began, with a point of release like here, the downtrend eventually reaches an end, as we can see here. Most recently, on around about June of this year, selling pressure exhausts itself. The market has moved far enough away from fair value that buyers begin stepping back in. This isn't necessarily the exact bottom, but it's the point where the next auction can begin and potentially enter the new cycle. You know, price has gone through this whole whirlwind of emotions, and we have completed the cycle. So one final time, if we get the original Chris Laurie chat, we can see Ethereum is basically, it's followed this to the exact. You know, again, I tried it on many different charts and I couldn't even get past the first few points. So it is kind of scary how, you know, how we could potentially have an Ethereum bottom based on these characteristics. You know, Chris Laurie's framework isn't really designed to predict the exact top or bottom. It's basically there to help you understand where the market, you know, when the market is in its auction cycle. You know, so points 1 to 5 represent expansion and trend development, as we can see. Then we have 6 to 8, which represents momentum slowing and potentially, you know, the start of a reversal, just like so. And then 9 to 13 represent distribution, decline, exhaustion, and the formation of a new base, like so. So looking at this, I do firmly believe the Ethereum bottom is in. It's hard to, you know, to look at this and not see the Ethereum chart fitting that perfectly. You know, try it with altcoins, try it with Bitcoin. It just doesn't fit. But I am under the understanding that the Ethereum bottom is in based on this psychological shift.